there is lies, damn lies, and statistics. To some extent, it is applicable to technical analysis as well, because sometimes it's awfully wrong. But on average, I would say it shows that actually there are some patterns, there are things which we can base on from just the price action, and it proves to be correct a lot of times, many times through the whole history, not only Bitcoin but like overall markets, but including Bitcoin through even this only 10 years of its history. And we can't exclude that powerful tool from our analysis, from our predictions, and the way we look at the market. So today there will be no news, guys, in the episode. We'll talk only about technical analysis, and namely we will talk about one of two indicators of the price, which in my opinion both of them sort of can spot the biggest bottoms, the highest peaks and the lowest bottoms of the price of Bitcoin. At least they show that so far during the whole history of Bitcoin. And the second one is even more interesting, but we will talk about it later, like keep it for the dessert in the later videos, because it is made for Bitcoin. It's very interesting. And the first one we'll talk about first one today. And actually, just few videos ago, we were talking about this other indicator, which is called historical volatility. Basically, it is showing how the price changes, how the volatility of the price is with respect to previous period of time. And for example, here the volatility was very low, so we were aware of some strong change in the price to happen very soon, and it did. And also it spots the highs and lows by those outrageous 100% periods, 100% values. Even the point at 2015, when we had this very high value, and also the bottom of the market. So, but today we will talk about the different indicator, although this one is very interesting, but we'll talk about one which is called stochastic oscillator. Here it is. And for those of you who don't know what is that, it basically shows the position of the current price with respect to some range of the prices of the price before, for the previous period of time, and it is in percents. So it's from 0 to 100. And when we have it, for example, at the very high value at 100%, it usually means that we are at very overbought territory, and it's very likely that we'll go down from that. And on the other hand, if we're very low, then it's likely that we will move to the upside, and this usually happens with the price for like for example, like here. So why I think that it's really strong, like very nicely shows the bottoms through the whole history. In fact, those kinds of indicators are became better and better the wider, the longer period of time you looked at. So this is daily chart now, and if you switch to weekly chart, and by the way, this is brave new coin here, so it's sort of an average of the price of Bitcoin over many exchanges. Well, you can pick some other, like what it is, the Bitstamp or the Bittrex probably, right? So you can have the long history as well, but just BLX works well as well. So let's look at the weekly chart, and what you can see here, that here was the bottom, for example, in 2011. Of course, this period is pretty much how to say, you wouldn't be really considering it because it is not so many exchanges, low volume, etc. But still, so bottom, low. Then it traces a lot of the local highs and local lows. 1, 2, 3, 4, 5, 6. 6, 7. So this is the maximum. Basically all major lows and highs were tracked. And here's another one. So we have the highest point in November 13th, and it was pretty at the 100%. And then we had the drop, and eventually we have lower and lower lows. If you'll zoom in, you'll see that we have lower highs and lower lows, which basically indicates the average is going down. And here again, that was the bear market, exactly the period of bear market. So then when we had this very bottom on January 15th, we had this very bottom. Well, this actually was even lower, but still we have this bottom on the bigger time scale here, and somewhere around this area we started to change the trend. In fact, if you look at that, then in September that was already like quite low here. So we had a correction, then dropped again. So still that was a sort of change of the trend from bullish to bearish around here like this. And basically that we saw in our oscillator. So it changes the trend. We see higher lows, higher highs, and now we are going up and up and up. If you will track the peaks, bottoms, and highs and lows here, you will see that they are basically follow the peaks of the price around here. So it's also a nice indicator of the local lows and local highs. Then eventually what you can see is that the price is going up, 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 and again it traces nearly each and every one among the highs and lows of the price. But more importantly, it actually has higher highs every time. Well, on average, still you can see like this is how it goes, and the higher lows as well. So it indicates that the trend is upwards. And then eventually at the peak of 2017 in December, it's suddenly changed this trend. So there's no more higher highs, there's lower low. Even in January already, huge low that basically stops all the previous trend, changes 180 degrees, and now we're forming lower lows and lower highs, and lower lows. But now this is the sweetest part. What you see now is that in June 18th there was the lowest point here, and then the December 18th. So we basically have it bottoming during this period of time. Of course, it doesn't mean that the June 18th was the lowest. It was just the strongest move, I would say. But still, this is the trend here. And now, even recently, we have this. You can even draw a line here. I'm sure something like this. Maybe like this. It's still a bit inclined upwards. So, well, it depends. You can pick either average stock or stochastic, or you can play with the plain one. But still, you can see that this is slightly changes the trend. And now, when we have this recent two lows, this one is already becoming more flat, right? And it seemed like it is about to make a low here and go up. It's not necessarily it will do. Until we will not see the higher high here, it's really hard to say anything. But it's sort of like eluding us, guys. Something interesting started to happen. Moreover, when you look at all of that, even on higher time frames, switch from weekly to monthly. Okay, so we're switching to monthly chart, and what do we see? It's actually has even better, like smoother indication. So this was the bottom. You see, it's perfectly spotted at the bottom here. It was the top. It's at the maximum at the top, almost like it's even predicts the top here. And now, if we look at the lowest point here, it's now, right? At the 2015 it was 9%. Now we're at 2.5%. It's the lowest point ever. So moreover, it's actually again started to sort of slowing down. So indeed, it's not really clear whether we will not go to like zero. It could be really like 0 point something, but it's just the probability of that to happen is really, really low. I must say that a lot of people are looking not at the stochastic oscillator but stochastic RSI. And the difference is that in stochastic RSI, this it tracks the behavior of RSI, not the behavior of the price. In fact, many people are preferring this because it sort of includes more data, but this is not 100% clear actually. And in my personal opinion, again, if you'll track the peaks all over the history, you will see that stochastic RSI also it predicts the indicates the tops and bottoms pretty well, but in my opinion it doesn't. You see, it has much more noise here, like oscillating much more with bigger intensity, but the pure stochastic has obvious trend to the upside, obvious trend to the downside. Here we don't have that. And looking at the stochastic RSI, some people, especially on the weekly chart, you can see that they say, okay, we can drop again. So we are going down, we can drop again to the lower low, and we can stay there like forever also. So it's a lot of room to fall. But first, this indicates that actually since it's tracking RSI is momentum of the price. This indicates that bears actually lost some of their energy already, and we are sort of not in the bearish territory. So not clear whether we'll go really to the lowest low. It's absolutely not guaranteed. So in any case, the fact that this doesn't reflect the price behavior in the same way, like this pretty smooth way as stochastic itself, I don't think that stochastic RSI is better. But of course, we need to look at a lot of the data to make our conclusion. So that is basically the point. And when you look at the monthly chart right now, together with all of the things which we just mentioned, you can see actually that February is basically at the very, very tiny green candle right now. So we are sort of having an attempt to go higher. So we'll see, of course, but already like we started to change this trend. Moreover, if we look at the price itself, then on the weekly chart, 200 days moving average, as we already talked, we didn't go below that moving average yet. We did test it here, but we didn't even try to test it yet. We may try it, but the fact that this level is strong enough to not even to let the price to approach it means a lot. And another thing, that if we actually look at the total capitalization of the coins, all the cryptocurrencies, then we will see that we are below this 200 weekly moving average, and we were below here as well. But the point is that really bearish signal would be if we went below, if we would go below and go like very low and stay there. Right now we are just hovering around, and this means that it's really not in the favor of bears, because the trend was bearish. So we are sort of thinking of change it. What I want to say, guys, is that don't think that this is some kind of the ultimate or universal solution to all of the problems we have. and that now we're ready to go up, and we are sort of on before the new bull run tomorrow. No, not really. We may have a lot of the bumps on the way there, but the fact is that with like more than 75% of the traders, investors are expecting the new low, they all may be really wrong. And you see, just on the technicals, it is really possible to happen. Okay, I hope that you learned something interesting, something useful, and if yes, please continue to follow the new episodes. We'll talk about the second indicator, which in my personal opinion is even more interesting, like not even more interesting, it's like one order better in my opinion than the stock indicator, stochastic, that very much of the hope, giving a lot of the hope to the bulls in my opinion right now as well. Okay, that is it for today. Thank you for watching and hope to see you in the next videos. Goodbye guys.